Here we go. All set.
Okay.
We are live.
Let me get it on Twitter so I see it. Here, hold on. I gotta get out of it. Sorry about that, everybody, but welcome back. In our continued effort to educate traders and introduce new talent, David is not new. He's been with MrTopStep for over 10 years. And one of the things, as I've tried to explain many times, is that we're not interested in everybody. We're only interested in people that really know what they're doing. And I know what they're doing, excuse me. So I made a couple of notes. Who is David Dubé? He's a former Wall Streeter. He worked at some big brokerage firms. He's one of the top educators on, I'm sorry, Trustpilot, my fault. And I know Trustpilot. And Marlon will put up a link here so you can check him out. He's got absolutely positive reviews. And like I said, he's been with us for 10 years. Hey, David, are you there?
Yes, I am. Hi, Danny.
Hey, thanks for coming in. Can you tell everybody a little bit about yourself?
Yeah, sure. I started the business back in the early 80s out of school. Started as just like most people, kind of a gopher boy, and kind of worked my way up through, the ranks over the years. And again, I had a lot of ambition to become a trader from my early days when I was a teenager. Actually, I had that's what kind of started the spark way back when, and and that spark continues to this day, trying to become the best I can be. But over the years, I've worked for a number of different organizations, investment banks, Lehman Brothers, the old Lehman Brothers, couple trading houses. The UBS Investment Bank was kind of a long stint for me over there in Stamford, Connecticut, where I'm also here in Stamford as well, and then well, in Connecticut, away from Stanford. But and then I'm also a commodity trading advisor. Trade on behalf of some few folks. And then basically been kind of trading on my own futures for again since really about 1980. Let's see, 2002 or so. So about 20 years now for directly futures. When I was a market maker at the investment banks, and so I traded healthcare biotechnology stocks. That was my focus, and then some technology stocks as well along with that. And so majority of the time was just strictly stock market making, but futures was always a part of the game because we did a lot of hedging. So when my value at risk, position wise, reach certain preset limits, we had to always, delta hedge with futures and so forth. So, but when I left that part of the business, I just went directly into trading futures. Obviously, the leverage is there, and so that became kind of my focus over the years. I worked for a couple small high frequency hedge funds up and through about the financial crisis. And then when that hit, of course, a lot of folks lost their positions, situations there, and kind of ended up going out on my own, trading for myself directly, and then kind of turned that into a more education oriented business, and where as you can see now, again, I've been doing Polaris Trading Group has been around now. We're in our 11th year, and so this is where we are. And again, I think Danny, you and I have been a part of the MrTopStep community now. I think it's well over 10 years.
Yeah, definitely.
So yeah, so it's a great community and a lot of good sharing of information is ongoing, and I think that's what makes our community very unique. people willing to share their knowledge, and without necessarily wanting something in return, per se. But there's a lot of great people in our community, so
Yeah.
you really enjoy
Well,
that.
we call it the collective, right?
Collective, yep,
Yeah. Um,
absolutely.
so can you talk a little bit about your philosophy of trading?
Yeah, sure. I mean, I don't think it's a whole lot different than a lot of people. Here's, again, you can kind of read along if you like, and that it's core of our methodology. But, um, you know, I'm a blocking and tackling kind of type trader. Nothing really fancy. Obviously, with a lot of folks out there, we probably all do similar things. I always kind of describe what I do is not reinventing the wheel, but kind of putting my own, spin on it. And from my perspective, it's what I've learned over the years from the people who've taught me. And in terms of developing what we have here at Polaris, I decided to take what I think the best, of what I have to offer, what I've learned, and put it in a, kind of more of a concise format. So, like everybody, I look for support and resistance levels, key levels, and so forth. Again, no different than anybody else. I do use some, market profiling techniques and so forth, but it's really an amalgam of a number of different disciplines that, and again, not to make things complicated, as a matter of fact, to make things much easier. I like to use the old adage, the KISS method, but keep it simple, smart. I like to use the word smart and rather
Yeah.
stupid, but keep it simple, smart. So, because things are happening so quickly during the day, you need to know, when I was a market maker back in the day, I didn't have, we had a lot of fancy equipment, but I didn't use it to the, to like the analytical extent. I needed to know what levels were. I needed to know where high volume points were, et cetera, et cetera. And then because of prices return to those areas, again, those are going to be areas that we're going to be, they're going to be trafficked heavily. So I need to know that. So I got to keep it simple. And as a market maker, I'm not just making a market in one instrument, one particular stock. There's a whole, again, a sector of different stocks. So though we had a computer system that generated a lot of the information that we needed at the time, to do our stuff, to make the active markets, we wanted to always keep it simple. So I kind of brought that philosophy forward with me here. I don't want to make things complicated. I want to actually, keep things as simple and as straightforward as possible, because when the markets are moving as quickly as they do, particularly in futures, you need to know what you're going to do, when you're going to do it, how you're going to do it. You need to have that plan. So levels are important naturally, but here's my key philosophy in everything that I do, and I repeat this to our community literally on a daily basis. I don't try to fade levels. I have in the past. Again, as a market maker, as you well know, uh, we were the ultimate fade traders, right? We're always, buying them as they're going down and vice versa. Well, I don't need to do that today. I don't want to do that today. I want to stay in alignment with what the dynamics in the whoever's in charge that day, bulls, bears, doesn't matter to me. I want to stay in alignment. But what I want to do, and we teach our folks to do this, is identify, this the idea about identifying key support and resistance areas, not necessarily just, that they're going to hold, but as reference points. And then when the market shows the dynamics that the market is either accepting or rejecting an area, we then get in alignment, to stay, what I refer to as staying with the big boys, right? I don't want to get run over. I want to be along with them. And as soon as we can identify those areas, and then what I refer to as the shift, we get in alignment with that shift and stay in alignment with that shift until the next shift. So again, identifying areas of is, critically important, but we're waiting for opportunities to get in alignment. And then when prices reach, so once we're in alignment, and again, then our next job is to use our tools, use our techniques that we have, our strategies, to, find an opportunistic trade, it's not as easy. I mean, it's easy to say get an alignment, but okay, then how do we do that? And that's where, the complement of tools that we have, that we've created over the years and strategies that help us do that. Now we can do it manually. We also have created our own algorithms to help us execute into a trade and then manage out of a trade. Now, again, I refer to that tool here as the auto trade assistant, and there the operative word is assistant. It's not a black box. It was effectively it was there to design. I designed it to help me initially years back get into a trade, because when we first started doing the education side and running, live trades, live an audience, charts and so forth, there was a lot going on. And again, the amount of time I'm trying to speak to the audience, speak to our membership about what's going on, it's very, very easy to miss a trade. Hey, we're looking to buy a pullback here. We're looking to buy this level, and boom, it's gone. So, that led me to designing an auto execution that will help me get into our core trade setups. All right. So we have basically 4 groups of them, but the auto trade assistant can help us get there. So there's tools that will help us. So basically all the tools and the methodology and the strategies that we use is all complementary to how we view the market, and and again, essentially getting in alignment. So there's a lot going on, but when we really drill it down, it's really to its basics. One of the things we do use quite often, and it's paramount through our entire methodology, is the average true range. Now, again, not a new concept. A lot of folks use the average true range. Like I said earlier, we don't invent the wheel here, but we do have our own spin on how we approach it, how we measure average true range, and how we utilize it to our advantage. And again, there's different average ranges. So in other words, you have the daily range, and then you have intraday ranges. So it's all based upon average ranges, but then we specifically drill it down to again getting in alignment. And then once we're in alignment, short, long, whatever, we stay there and focus on that until that runs its course. So that's the core of it. I think one of the other aspects that in terms of ranges and so forth that we use as a mainstay, as part of our core methodology, is what's called the Taylor 3-day cycle. And I learned that particular technique back when I was a market maker. Actually, the institutional community introduced me to the 3-day Taylor cycle, though as a market maker, I did not utilize it. It wasn't my function. It's not what I did, as to be a market maker. Had nothing to do with that necessarily, but I was introduced to it. And then when I left that side of the business and went on my own, essentially, I kind of got reintroduced to it, and now it's become a major part of how we view market activity. And we have our own tools, we have our own spreadsheets that we developed. If you take a look on the screen here, I'll just kind of move that over to that particular area of our website. And it's called the Taylor 3-day cycle, very simply. We just shorten it by saying the PTG 3-day cycle, but all the accolades go to George Douglas Taylor. And so we have a spreadsheet. And again, I've been posting images of the spreadsheet out on the MrTopStep Twitter feed and so forth over the weeks. But essentially, this is what's referred to as the electronic book method. So for those out there that are familiar somewhat with Taylor, many of you may not be. It is well trafficked and well known by the institutional community. Again, that's where I was initially introduced to it, and I know a number of different hedge funds that actually utilize it and have been utilizing it for years. The retail, though, side of the trading community is very they don't know it that well, if at all. All right, and I think Polaris here is probably, could be mistaken on this, but I think we're the only one that has an active product and actually an electronic book method that we put out on a daily basis. So that's one of the tools that we use. And again, if you could take kind of a zoom in view of a section of our spreadsheet, what it does is and again, it's based all on certain ranges, as I've mentioned, and it generates, probabilistic targets, to look for, lower targets, upper targets, etc. And so that's kind of kind of an overview of a lot of the stuff we do. But the daily trade strategy is kind of our beginning, our starting point for everybody, where I write this in the evening for the next day. And it can be challenging to write, what you think may happen the next day. But what I do here is I go through each cycle day. So today actually is a cycle day 2, mid cycle of the 3, and I review the prior day. I look at what we'll talk about, what we're looking for the current session or the upcoming session, and again, I have certain targets and such that I outline, and these are just, again, the starting points to begin the day. And then as the day unfolds dynamically, we make whatever necessary adjustments throughout the day. So like I said, it's not rocket science. It's just using what the market generated data has already provided for us, and then putting it into hopefully an understandable way, and in a simple way. Because again, we don't want to confuse people out there. We don't want to confuse our members. We want to actually help them become much more empowered in learning how to navigate the markets. And again, like I said, the overall MrTopStep community, of the input everybody gives, because there are things that folks in the community um, present to everybody that I'm not paying attention to. It's not part of what I look at, but I do reference it, and I said, geez, something, that's the beauty of as you say, the collective, is everybody sharing what they know, and from their perspective, from their vantage point. And then again, it's information, but then how you use it, you kind of put it into your own plan,
Right.
essentially.
Well, hey,
So
David, I mean, I think you'll agree that there have been a lot of people that have come into the room. They've gone off. They've written trading systems. They've learned an enormous amount about what it takes to create this kind of stuff, and we share it openly. I mean,
yep.
very few firms do that. Hey, I got a quick question for you. We had a big rock higher this morning. We traded up to 50.95, and we just took out yesterday's low at 47. Any view on what you think here?
Yeah, so again, kind of, let me just switch the charts here a little bit, on the view. So here's kind of a view of that, the spreadsheet that I mentioned there on Taylor. But now we kind of have also created an indicator that overlays on NinjaTrader as well as Sierra chart. So based on the 3-day cycle format, okay. Today, so just to kind of give you a quick overview, and I'll answer your question there. Is that on the cycle, we're looking for an initial low and then a rally off the low, which, by the way, today our rally targets, we were looking for around roughly around the 80s to like 5100. So we just pretty much got into the lower part of that zone. And then, of course, as you can see here, the market stalled out. So now we're back down, challenging the cycle day 1 low. So if this, from the cycle perspective, anyways, if this fails, okay, again, the market has been obviously going, lower bias. We're in this big corrective mode, and that has probably still some ways to run. The bulls just not been able to hold any bid whatsoever. They can get it up there a little bit, but they haven't been able to turn anything. So based upon the cycle perspective, it's still pretty weak, and the potentiality for lower prices clearly is there. And I think a lot of folks out there are kind of echoing the same look. unless the bulls can get past, get back above some key levels above, benefits at this stage, remains to the in the bearish camp. One thing I want to show on this, one of the things that we we look at again, we like with a lot of people, we do a lot of multi-time frame analysis and so forth. But again, keeping it, simple to the idea, all right, is like, here's our daily chart. So what you see here is anchored VWAP based upon off the beginning of the year. So we've broken those anchored VWAP areas, right? And so, that's not certainly that's a reinforcing bearish sign, all right, for potentially lower prices. So that area would need to get recovered. But one of the tools that we do use, and I learned this as well from my days when I was an institutional trader, market maker, is what we refer to as the 3-day central pivot zone. And now it is different than the 3-day cycle, but it is complementary to it. So the idea here simply is this little magenta zone that you see. So what that simply is, it's the daily pivot point. So that's the high, low, close divided by 3. And then the midpoint of the day, again, that calculation is simple as high, low divided by 2. So that gives you a midpoint of the day and then a pivot point of the day. But what this is a 3-day average, rolling average of the central pivot and midpoint for each day. So that's a 3-day zone. And what that means for us is, and this is how I learned this, is and again, from the institutional folks when I was a market maker, was that as the structure of price is staying above that 3-day zone, the lean is bullish. But once you see up here at the top area, okay, where you see how they're beginning they've been overlapping, well, that obviously denotes a little bit more of a range condition, kind of in a potential topping formation, which it appears to have turned out that way. What we want to look for then is when the 3-day central pivots shift back below this area. So actually our sell signal that we were looking for, again, on a bigger picture, all right, then again, keep in mind the idea of what we're always looking to do as intraday traders is keep aligned with the elephants, right, the big boys out there. And this is the concept that I learned when I was a market maker from the big institutional folks. This is stuff that everybody talks about, the 50-200 moving golden cross. That, to me, that's just total bunk. All right, a lot of people, the institutions, at least the ones that I've dealt with over the years, use more price structure based rather than moving averages, since of course they lag quite a bit. But you can see the actual sell signal came somewhere in the neighborhood of around, just early April 4th or so. And the price has been trailing that. You can see, like in this instance here, in this particular day, we had a rally here off the 50-day moving average, but stalled right up there into that 3-day central pivot zone. So what the institutions like to do is, if it gets above that or stalls into it, those are areas to be, looking to, in this case, establish shorts or certainly get out of longs if you were long from lower levels. And the market's just been now, continuously weak every day. So until my viewpoint going forward on a larger perspective is, as long as the price stays below these 3-day central pivot zones, there is absolutely no reason we should be looking structurally, anyways, for a larger picture on the long side. The corrective action is still unfolding. Once price is able to, at some point, get above 2 consecutive 3-day central pivots, then the market will enter what I would refer to as a stabilization period, not necessarily a reversal period. But so at this point, Danny, going forward, to answer your question, I don't see any, intraday activity. Yes, you can go long. Obviously, intraday action is again, very, very fluid. But from a standpoint of structural direction, now again, I don't know where this is going to finally end up and find a low, but at this point, That's not what we try to do here anyways. We just try to stay in alignment. And right now the alignment suggests continuing to sell, as the market bounces back up. And
Yeah.
again, you've mentioned it many, many times, when the market rallies, you're looking to fade those, the opening areas, for it. And as you can see here, again, just kind of zooming in a little bit further, one of our targets up here was near this 95 area within the context of that, that area. And you can see right up there, right at the edge, it stalls. Now, again, the institutional folks kind of pass this along to me. This is the type of area, if it got into, or in this case, right to the edge, so how do you play something like this, right? Certainly you can just short your futures intraday and so forth. But again, we like to kind of use options as a way of, positioning, for larger moves. For myself and for what I suggest our community is, if you're trading futures now, everybody's different out there, but I use futures just as an intraday tool. So at the end of the day, I'm win, lose, or draw. I'm flat at the end of the day in futures. But if I do want to carry, a multi-day position, I will typically do it, utilizing an options type play. But that would be an area to have sold this morning. And again, we talked about that in our community this morning as part of prep. And as also we mentioned, like today, an early rally would, would be kind of the odds favor to rally this morning, which we got. But then that's it. The odds favor to rally. Once the rally happens, the market has to, I always refer to as, the market has to sustain that bid. If they've rallied, if the bulls, the buyers were able to push it higher, well, the onus is on them to keep that bid sustained. And if they can't, then, again, I also refer to that as the bulls slipping on the soap bar. And so that's what seems to be unfolding this afternoon here, is they pumping up in the morning and then sell it off in the afternoon. And here we are.
Yeah. The dead cat bounces. So
Yep.
David, so today was just kind of a introduction to what you do and that. I think
Yep.
everything went great. But tomorrow morning, what are we doing?
Yeah, so if everybody wants to join us, I do a morning briefing. So again, everything starts, as I mentioned, with our daily trade strategy. All right. So we do offer, and if anybody's interested in that, we do offer a 2-week free trial to that. The overall monthly cost on that is like $29, to have a subscription to it. But we do offer a trial period on that. And this is the starting point for our folks every evening for the next day. Again, this is published typically by 9 p.m. Eastern for the next day, our initial plan. And then in the morning, we have our own live in our community, our own morning briefing. It typically starts at 9:15. And
No,
again, as I think
no, is that the briefing that you're gonna do, or is it a different?
Yeah, so what it is every day we do kind of a briefing to kind of supplement, what happened overnight. Since I'm not writing, since I'm writing this daily trade strategy for the next day, there's obviously, activities that happened overnight that we, may need to fill in some gaps or such. So generally, the briefing takes about 10 to 15 minutes, just before the opening, 9:15. And you just kind of fill in any gaps in what we're expecting perhaps for the opening for that day. So that begins every day at 9:15. So we'll do that tomorrow. We can do that live here on the MrTopStep stream.
All right.
And if anybody wants to join in on that as well. And what we'll do is we can just leave the stream up and running as well. So to kind of get maybe probably like the first half of the day in, and you can kind of, everybody can watch what we do in our room on a live basis.
All right.
So,
That's cool.
all right. So we
All
can
right.
do that
So
tomorrow.
what we'll do is we'll put out a notice after the close. We'll retweet it a couple of times, and then we'll shoot it out in the morning.
Okay. Yeah.
All
Sounds
right.
good.
Well,
Sounds
thank you
good.
very much for coming in, David, and really appreciate your hard work.
All right. My pleasure. Thanks, Danny. All right. We'll
You
see
bet.
everybody tomorrow morning.
All right.
Okay.
Thank you. Okay, you guys, until next time, there's a lot more to do. We've got a big crew. We're gonna do a charting class in the next couple of days. I don't know if we can't do it this week, but we're gonna have very, very well-known guy come in and show some chart setups on his charts. Okay, so we'll see you tomorrow. Now, if I knew a keyboard, I had to.